With the stock market down over 10% in a span of 4 weeks, and your net worth's been depleting day by day as the stock market declines, have you ever wondered, is there a better way? Is there a way I could make money when everything's crashing around me? There is no sector to invest your money in right now. So how do I make money in a crashing stock market? So today I'm going to show you 3 tips that you could really achieve and make money while the stock market's crashing all around you. So stay tuned for more. So the first way you could try making money while the stock market's crashing around you is short selling the market. Now what I mean by that is generally you would buy a stock for say $100, and as soon as it goes up to 110 and you feel that's the most it would go to, you would sell it. So you make a profit of $10 per stock. Similarly, you could also short the stock what I mean by stock shorting is sell the stock at 110 and then you buy it back at 100. And that's another way where you would still make 100 even though the market's falling down behind you. So that's just one way. And why this is so important is over the span of 4 weeks that the markets actually fell down 10%, there is a sector of traders, and these are called short sellers, that are up $110 billion in profits. Now this is a tremendous amount of money. But this is smart traders that actually know that it's not just buying and selling, but it's also selling and buying is where you can make money. So that's now that we have looked at how exactly you could short sell, and let's look at these different categories that you could short sell now. So the categories that you could try short selling are stocks, ETFs, and futures. Now this all depends on what is your risk appetite. Do you want to diversify, or do you want to stay focused on a particular stock? Or you want to try a mix of different approaches. So I'm going to explain what these different approaches are so you get a better idea of like how exactly you could make money when the stock market's falling. So the first that we'll dive into is short selling stocks. So the way I would personally short sell stocks is I would pick a sector that is the weakest, that is performing the worst. For example, I'll pick a sector that's performing lower and below all the other sectors in the market. And once I've identified that sector, I will then find one of the worst performing stocks in that sector and I'll start shorting that stock. So let's see how that would work with an example. Now, the way I would go about doing it is I would first identify which sector is performing badly. And I would look at either a weekly time frame if I'm more on the aggressive side, but the monthly is more conservative to give you more time to really think which sector is actually sinking in the market to make a better informed decision. So as you can see, the technology sector, and as we all know, the technology sector performed the worst. So the technology sector would be one of the good sectors to short in this span of time. Now, it may be the market's turn now, but if the market was falling and maybe in the next fall or the next crash, there could be a different sector that would have been performing badly. So that's one thing that you could look for. So in this example, I would look at technology. I know technology seems to be not performing well. I'll then identify which stocks in the technology sector are performing badly, and then I'll start shorting those. So let's look at an example right now. So the way I would go about shorting the market is I would first identify something that is the weakest on the monthly time frame. So I see your technology is doing pretty badly, so I'll start looking more into the technology sector. Now, this is just an example. This is a site that I use personally. You feel free to use any software that would give you these types of analytics, but this is just an example that I use. So now that I've understood which sector is the weakest, now let's look at the weakest performers in the sector. So what I'm doing now is that I'm heading towards the performance category. I know technology is the weakest. Now let's look at the market cap, because now I do not want to short anything that's a penny stock, anything that's like has a chance of being very volatile. So I'll look at anything that's like a mid cap and above, and I'll shortlist the time frame to be monthly, because I know monthly is where I'll get a better perspective on what's going down the most. After I do that, I'll then look at charts and I'll just get a picture of what charts have this kind of tendencies. So this is just like, different views that you could analyze it. And as you can see, I have Aurora Innovations here, And a good time to short this would be if this broke down the 50-day moving average line and then got the returns all the way from down there to like till it stops going down any further. So this is mid cap. So now I would, if you're more conservative, you could just go and trade with shorting any of the large caps, and that's fine too. So it's again on your risk appetite. Another example is Matterport, and the same tendency where it broke down after trying to bounce out of its 50-day moving average and started declining all the way down. So there's a lot of different stock that you could then pick from your to help you with your short selling tendencies and try to make money while the market's falling. Now that we have looked at how we could short sell stocks, let's look at another category. This is exchange traded funds that are called ETFs. Now, ETFs, similar to stocks, could be either an entire category or a genre or a sector of stocks together that are bundled together and packaged as one particular ETF. Now, you can have ETFs in technology, you could have ETFs in a lot of different sectors, but this is not the video for that. But another way that you could make money is by short selling ETFs. Now, that we know that technology is doing pretty badly. Technology was one of the worst sectors in the previous downfall in the market. A good way we could have shorted an entire sector would be to short sell ETFs. So let's look at an example of what that would mean. Now, the way that I would personally short sell an ETF or find a good candidate to match that category is to look at the industry. Now, the industry should be categorized. There's a lot of industries that you could focus on. Maybe if you just want to focus on exchange traded funds, as in this example, I would just like categorize it in the industry category and then look at performance. Now again, we're focusing on monthly because we do not want to dive into the weekly or the daily timeframes yet because it doesn't give us a better picture. I then look at the performance monthly, and that would again categorize it for me based on the industries or the ETFs that are available in that particular filter. And then I'll look at the basics, and I'll just look at, okay, which actually is a good candidate for me to short sell. So there's a lot of different options for you. This is not a technical analysis video, but just to show you what is available, how you could do it. And we'll have another video. Let me know if you're interested in knowing how to actually do it, and I could teach you that as well. But this is just to give you an overall picture. So for example, innovation tanked in the last short period of time. So that's another good category, but we'll talk about that in a different video. For now, just to know that ETFs is another category that you could make money short selling the market. So now that we have finished ETFs, let's look at our third category that we could make money short selling the market. And the third category is futures. Now, futures is a consolidation of a lot of different stocks. It could be a sector. There are different types of futures available in the entire S&P or the US market. A common one is the NASDAQ futures and the S&P 500 futures. So for an example, to just tell you how you could do it, I would personally have shorted the NASDAQ futures in this example because I know technology is the weakest sector. And when the market's falling down so much, you could have easily made some money by just short selling a future. Now, a future is an expensive category of short sell. So this is something that I would only do if you are confident, you do not have you have a big risk tolerance against a downfall, losing some money, but it also has a potential to make a lot of money. So all the big investors that you see, a lot of them will be trying to target investing in futures because futures has a potential to really make you or it will break you. So I'll show you an example of how you could do it if you have a high risk tolerance and are ready to just go all into the market and you know how to really trade. Futures could be a good option for you. So let's look at an example of how to do that. So in front of me, I have the NASDAQ futures. Now this is just one example, but you could short gold futures, you could short like tin futures. There's so many different commodities of futures available, but let me know if you want to know more about futures. I could share that in a different video, but for now we're just going to focus on NASDAQ futures because we know technology fell the most in this short last 4-week period. So as you can tell, around the mid-November is when we first saw our first decline in the NASDAQ futures, and it kind of consolidated, tried to hold its ground around the 20-day moving average, and then it broke down. So if this was me and I was putting my money into the market, my gut instinct would be to start shorting the futures once it broke the 20-day moving average. And I do know that it would kind of hold its ground on the 50-day moving average, and that's where I would take my profits. So this would be my profits in the futures. And you could always leverage up and leverage down in futures too, or scale up and scale down in another way where you could try making money. But for now, all that we want to understand is that we could short futures, we could short stocks, and we could short ETFs. Now, a few things to keep in mind while we're shorting the market. Now, a lot of people would have told you that shorting the market is risky, and that is a true fact. Shorting the market is risky because the markets don't usually fall down to the ground. They just drop for a short duration of time and then they start going up again. So you should have a good risk tolerance if you're doing it, but there is potential to make money in the market. It's not that, you will lose your entire portfolio. So a few things to keep in mind while you short the market. The first thing is market timing. So you have to make sure that you time your short at the right time. So I could have an entire video dedicated to market timing. Let me know if you're interested. But for now, keeping an eye on when exactly is the market turning direction, what is the right time to buy or what's the right time to short a stock is important. Support and resistance levels is important too. You should not short a stock when it's actually holding its ground on good support. Another important point is moving average lines that the market respects. So the 200-day moving average line is very important. The market respects that, especially in the higher time frames, such as the weekly and the daily. So keep an eye out on the moving average lines. And if it's around those lines, don't short it. Wait for it to fail those lines and then short it. The world market direction. So the entire world's moving up. That's not a right time for you to short the market because it's just a matter of time before our market also would then start heading up in the up direction. And market trend. So if the entire market's moving up and there is just this one stock that's moving down, it's risky to short. It's not saying it's impossible and you should not, but it's risky because slowly or surely that stock would also turn up and would also head towards a positive direction too. So that's a few points to keep in mind while you're shorting the market. Do let me know if you're interested in a more focused video on any of the points that I covered here, and I would be happy to share it with you. So with that, thank you for watching this video, and I hope to stay in touch with you for another video coming up soon. Thank you.